All right, Bulls and Bears, what is happening? Back with another dose. BX4. We're going to ride the bull, prepare for the bear. We got a lot of economic, financial news to get caught up on. There's a lot of directions we can go. Trying to stay focused on the financial/economic side of things. The hurricane disaster is very, very sad to see what's happening. We're going to talk about that real quick. Then we'll get into the markets. What we have headed for us in October, the other risks out there that could bring this economy and the markets both down. First of all, when we talk about money being available, we can create this money out of nothing in endless amounts. It seems, right? When they bailed out the banks in 2023, no question, the money was there. They came together. The Treasury, the Fed, the FDIC came together. The money was there for the billionaires. Look what's probably have seen this, right? It's been widely reported. FEMA doesn't have enough funding to last through hurricane season. When was the last time you heard about us not having enough money for funding war, shipping weapons wherever, anywhere in the world? Just think about this, folks. Pretty disgusting what's going on here, but it's nothing new. If you've been paying attention, this is nothing new. This is just the latest situation. And this is actually opening a lot of people's eyes. People are now seeing it, but we saw it in other disasters. We see it everywhere you look. We see money for certain things, but not other things. And that's why it's good to have the people be the ones that create things, right? Not just the people that can print the most money, right? We are the workforce. The people are the labor. The people printing money, they don't do any actual work. We're the ones that make the economy run, right? Not all of our jobs are productive. Some of us sit behind a microphone, but information is power. But at least you're going to get truthful information here. Some of these people, the bankers, they don't even tell the truth. In fact, if you look at a lot of what they say, it's just the opposite. All right, let's talk about the jobs numbers, right? These are supposed to be numbers that are considered blowout numbers, right? Let me just bring up the headline here. So NBC put it. Let me make myself a little bit smaller here. Dow closes record high after blowout jobs report. So what's the blowout jobs number? 254,000. But yet every month we have 700 and 800,000 people newly unemployed. And if you look at the jobs numbers, over 30,000 were government jobs. So we're closer to 200,000. Just wait till they revise it next month. Might be below 200,000, right? Stocks rallied after data showed non-farm payrolls grew by 254,000 in September, outpacing the forecasted gain of 150,000 from economists that were polled. Of course, they're going to come out with a number that's low. Oh, we expect this. That way, even a bad number is going to be considered good. After a summer of weak labor data readings, this is reassuring, a reassuring reading. So if the economy was so great, if this was going good, why did we need rate cuts, right? Why do we need rate cuts? Doesn't make any sense, does it? Also, take a look at this. We're told again that the consumer is doing so wonderfully, so resilient. That's the word they've been throwing around a lot. Consumers resilient. Well, Deutsche Bank doesn't quite agree that the consumers are resilient, at least some of them. Look at this. Student loan delinquencies poised to rise substantially, according to Deutsche Bank. Well, I thought the consumers were resilient. Somebody better go tell Deutsche Bank that consumers are actually resilient, that headline is wrong. All right. No way delinquencies are going to rise because we're being told the consumer is resilient. But yes, we have to have all these down payment assistance programs because people have so much money. We're told that the savings rate is much higher. It's about double than what they've been reporting for several years. All of a sudden, last month they came out and said the savings rate is actually higher, almost twice as high as what we've been saying for years. That's what they are expecting us to believe. But yet we need all these down payment assistance programs. Ms. Harris is out there talking about a nationwide down payment assistance programs. Somebody needs to tell her that people don't need it. People have tons of savings. They're resilient. The savings rate is much higher than we thought. Why do we need down payment programs? Folks, if it doesn't make any sense, then you know what to do, you know what to believe. Also, real quick before we move on, back to the jobs numbers. The number one category for jobs in September Leisure and hospitality, folks. These are jobs that are not even producing anything. I guess you could say they produce customer service, right? These are your servers. These are your desk workers at hotels, hospitality jobs. Second was healthcare and social assistance, helping people. Third was government. Fourth was construction. Retail, trade, financial activities, rounding up the top 5 and 6. Jobs decreased, though, in the following categories: manufacturing, transportation, and warehousing. That's because the consumer demand, the warehousing part of it, and transportation part of it, the consumer demand is dwindling so much. And we're just a couple of months out from the holidays. We're entering holiday season. They're going to be talking about Black Friday, what to expect here in a few weeks. That's going to be in the news, what to expect on Black Friday, how the number's going to look if we make it to Black Friday before everything falls apart. And we're going to talk about all the other risks coming up this month in October. We did avert one potential black swan / crisis. That was the dock worker strike. And I called it right here. I said I'd be very surprised if they let this continue. But there's several other risks that we need to look out for this month. And we're going to talk about that here in just a bit here. Gold fell. The gold price fell as stronger jobs report sinks hopes for rate cuts. So here's how insane this is. There's actually people out there, traders, investors, hoping for a bad jobs number in order to get more rate cuts. That way they can invest, borrow more, get more cheap money, and invest to buy assets. What are they investing in? Well, gold falls as stronger U.S. jobs data shrinks hopes of big Fed rate cuts. So how weird is it that we're hoping for bad jobs numbers to get a rate cut? Right? So we need something bad to happen for something good to happen to help the economy, for the rate cuts. If you want to call rate cuts good, I call rate cuts bad. Any rate cut is bad. That's what got us into this mess. That's why the cost of living is so high. That's why people are in so much debt, because of easy money, low rates, right? For so many years. We need drastic rate increases. The problem then becomes people that have to finance things can't buy. Look at the low numbers in the housing market. The sales price, the sales levels are at multi-decade lows for the housing market. But the investors, the hedge funds / billionaires, they can come in because they're not worried about financing. They're paying cash. They don't care what the interest rate is. The interest rate could be 100%. Doesn't matter because they're not borrowing the money, right? They're paying cash for the most part. Now, there are some businesses out there that are just living on borrowed money and barely scraping by, barely paying the interest on their debt. And we call those zombie companies. It's been a while since I got the numbers on that, but maybe it was about a year and a half ago, we did the breakdown on that. At that time, the breakdown showed it was about 1 in 5 U.S. companies were zombie companies, basically just living off borrowed money, living off debt, kind of like most of the U.S. consumers, just scraping by, getting further and further into debt. So we'll talk about that at a later time, but let's go ahead and get into some layoff numbers here. Not really numbers, but a headline that caught my eye. Paramount sued by ex-workers over mass layoffs without notice. Hundreds of workers at the company were laid off last month as it aims to slash 15% of its workforce. So there you go. Another sign that the consumer may be pulling back on certain types of spending. Paramount Global is facing a new lawsuit. The company denied the allegations. Paramount employees are entitled to federal or state warn notice and receive it. I think people are lucky to get any notice to get laid off. I've had a job where I didn't get notified of a layoff. They walked me right out of the office. Oh, wait a minute. That wasn't called a layoff. That was called getting fired. My bad. My mess up on that. So you're lucky if you get any notice if you're laid off. If you're fired, they're just going to walk you out the door. So maybe they should have just fired these people. That way they couldn't complain, because you don't get a notice if you're fired, do you? Maybe you do, but usually it's because you did something bad. In my case, I didn't do anything bad, but they thought I did. But I didn't really like the job that much anyway, so I didn't even argue with it. I'm like, okay, I'll draw unemployment for 8 months to a year because being let go, you're entitled here in California to unemployment. They tried to actually fight me on that, and I went to a little trial. They didn't show up because they had no evidence that I actually did anything wrong. Anyways, didn't mean to digress on that here. Something else I want to get into here today. Now, as I mentioned at the beginning of this video, the markets were soaking up the jobs report, which is really not a very good jobs report at all. But that's the way it was being presented, of course. They want things to look really good, especially now here, a month out from November. Look at this S&P 500 chart and tell me if this doesn't look like something that's ready to correct here. Look at this. Right? This was considered a bubble back financial crisis time frame right here, right? Going from S&P 500, going from about 820 to 1505, right? Not even really doubling, right? From where it was at the bottom, coming out of 2001 and the dot-com crash and all that. Now, folks, ever since then, we dropped back down to looks like what, 5, maybe 600 on the S&P 500 after the financial crisis. Looks like about late 2009, early 2010, it bottomed out, maybe early 2009. Anyways, the point is, look from where it went, look where it came from up to where we are now. Does this look sustainable to you? A nearly parabolic chart, nearly straight up and down. All right, folks, we're overdue for a lot of things. The currency, the US dollar, fiat currency, world reserve currency, it's overdue. The average reserve currency in the globe is about 50 years. It's about 50 years. We came off the gold standard in 71. Many would say that's when we became a fully fiat currency, which it is. And what was that? Almost 53 years ago now. In December, right? Yeah, 53 years. It'll be the end of the year. We're overdue there. We're overdue for a correction. Look at this. How long can they sustain this? Many people say forever, that we're just going to keep on going. But there's always something that derails it, isn't it? And then afterwards, people say, oh, yeah, we knew there was going to be a pullback. But on the way up, you've got people jumping in, really chasing a lot of the stocks and chasing these indices. All right, so pretty interesting. But October, we're barely in, not even through a week yet of October. Like I said at the beginning, the doc crisis, nothing burger there. What else do we have going on? We have the banks. It started on the 1st of October. Not seeing any signs yet of massive problems borrowing money. I still see people getting credit card lines in my industry. That's the industry that I work in. People are not complaining to me about getting dropped credit limits. Of course, it's only been a few days. October 1st was 5 days ago, 6 days ago now. Nothing yet on that. But we'll have to see how it plays out. I would give it at least a few weeks. What else do we have? Massive risks globally. The countries that are not happy with the U.S. right now for what's going on, right? But something that I've spoken about here a few times, but I need to remind you because maybe it's been a week or two. The BRICS nations have a meeting coming up this month. And some are speculating that the BRICS nations are going to get together, maybe at this meeting, maybe not, maybe right after, maybe a while after. But at some point in the very near future, all these countries are going to get together. And this is what's being said in certain groups, is that they're saying that these nations are going to get together and dump US dollars all at once, causing a massive spike in interest rates and lots of problems, lots of economic problems overnight. Like you could wake up on a Monday and the dollar would be devalued by 300%. Everything costs more instantly with the dumping of the dollars, right? So we'll have to, I would say, be careful, be cautious, grab a few extra canned goods, maybe keep a closer eye on where your money's at. I told you before, I'm doing the Warren Buffett thing. I'm not much in the markets at all now. That's why you haven't really heard of me talk about a trade recently, right? It's usually every 2 to 3 weeks, I'll find something, some sort of trade, maybe once a month. Sometimes I'll go 2 to 3 months without a trade though, because I don't feel like I have to be trading all the time. I wait for a very good opportunity to come up. And that's why the ones that I've talked about here in this channel, most of them have been winners. I had to go back and look. It's over 90% of the trades I talk about here are winners because I wait for no-brainers. Like when the market came down in 2020, jumped into a bunch of oil stocks. That was beautiful. Oil was trading negative for a while. I mean, you couldn't lose there. That was a no-brainer. After the housing bubble went bust, no-brainer came in about real estate, right? So you could sit there and wait for the bust. And if you do that, you're not going to be trading that much because busts don't happen that often. But there's sectors and different things that happen that you can actually, take advantage of. But my strategy right now is kind of being very defensive. You can call it waiting on the sidelines, taking a wait and see approach or watch and see approach. And I think a lot of you are kind of feeling the same way. I've read some of your comments. I've got some of your emails. By the way, I'm way behind on my emails. If you've emailed me and I haven't responded, I'm not trying to be rude. It's just that I have I'm a very busy person, a lot of things going on. This channel is just probably a fraction of what I do. Not a full-time YouTuber. Many are, but I'm not. Maybe one day, but I don't know. I don't think my channel is scoped towards a super wide appeal. But there are some financial channels that are doing really good. So who knows? Could be a lot of different things with the algorithms and things that I'm not even aware of, things I'm doing wrong. But I appreciate everybody being here. Please let me know what you think about all this. October, what other risks do you see this month? October is typically a month where big things happen, right? A lot of red happens in the stock market. In October, we've got politicians out there warning of something catastrophic out there, ready to happen this month. I see more things than you can imagine. But I'm trying to think of the words to say here, not to offend anybody, because there's a lot of people so easily offended nowadays. Political upheaval, right? I know some of you are center, like me. You don't really take side. You're not left, you're not right. You're not blue, you're not red. A lot of people are. A lot of people are in this camp or that camp. And if you say something about one side or the other, they'll get all bent out of shape and they'll leave you nasty comments. They'll unsubscribe. I'm just going to leave it very general and I'll let you figure it out. But I think this is definitely going to happen. Political upheaval in the next, what's today, the 5th of October? Within the next 35 days, put it that way. You know where that leads us, folks. Political upheaval. And a lot of things in this country are going in the wrong direction. People are getting angry. People are getting upset. They see what's going on with the way the money's being spent on certain things and not other things. Again, most of us on this channel, most of my audience here, I think you probably disagree with the way that the funds are being utilized, right? It's terrible what's happening right now, folks. Country is insolvent, 35 plus trillion in debt, 100 plus trillion unfunded liabilities. The only way to keep paying people for the things they're promised, right? What we call entitlements, and the government calls them liabilities. $100 trillion. The only way is to keep borrowing more money. Otherwise, no social security for you, no help or assistance for the needy, all these things, right? Doesn't happen without more spending, more debt accumulation, which is money that they just create. And as a country, we pay interest on it, right? We don't even create or print our own money. Insane, isn't it? From the Federal Reserve, that's not even federal. They're not even as federal as FedEx, right? I know it sounds crazy, but it's true, folks. What do you think about all this? That S&P chart, parabolic, folks. We're ripe for a correction. Let me just bring it up one more time here. Ripe for a correction, aren't we? This is just not normal. I mean, look at this goes all the way back to the 30s, folks. Look, when we had a fiat currency where you couldn't just create endless amounts of money, look how slow and steady the market was, S&P, right? Early 70s, where we at on this chart here, right here, that's when it started ramping up. Look at that. And now more money's created, more money printed, borrowed, whatever you want to call it. Look at this. Folks, what's going to stop this, folks? And how does this end up? Like to read your comments. Please let me know down in comments. Thanks, everybody, for supporting me. I really do appreciate it. I love making these videos. I love reading your comments. It's awesome. All right. Hope everybody's well. Sad to see what's going on in this country and around the world. I don't just want to focus on the U.S. because the wars, the pain and suffering right now, people are being decimated globally. When you look at everything, right? Anyways, let me know, folks. I'm at a loss for words now. Happy weekend. Hope you're well. Be thankful for what you have, folks, because there's people walking around. Let's just focus on the U.S. right now. Walking around North Carolina, looking for their family. Kids walking around, just sad stuff here. We're going to leave it at that, folks. Keep stacking, everybody. Big love, peace.